Trading Today. This is Bob Desmond, and what we're going to talk about this morning is, are the governments around the world beginning to warm up yet again to the gold standard? Are they reading the tea leaves and identifying the fact that the fiat currency world that we've lived in ever since President Nixon, back in 1971, took us off the gold standard? It appears that way. At least we're seeing, as Larry Kudlow used to say, we're seeing green shoots out there, which would imply the same. So we're going to talk about an article that's on Zero Hedge showing evidence to that effect. We're also going to show the data out of the Federal Reserve indicating that, I said last night, it was about $120 billion of additional buying between now and the 24th. Is it the 24th or the 11th? I think it's the 11th. 14th, sorry, the 14th of November. It's going to be $120 billion per day. Per day. It's almost unfathomable. Per day. What's wrong with the banks? I keep asking that question. I had a reply back yesterday. The banks are illiquid. Apparently, why do you need all this credit? But nobody wants to talk about it. You would think that this is the biggest news since the financial collapse and TARP, but nobody's talking about it. So we're going to go today till about 6:30 Eastern Standard Time. It's currently 50.5 coffee. It's currently 5:02 in the AM Eastern Standard Time. Let's get to it. So we began with, are we going back to a gold standard? Ultimately, probably we will. And here's an indicator that we may be seeing countries begin to accumulate gold in earnest. I mean, the Chinese and the Russians have been doing this for years. They have been hoarding gold in anticipation of a financial crisis. Good for them. You can say whatever you want about their politics, their governments, but they've been wise enough to buy gold. And now Germany appears for the first time in 21 years to be buying gold. Where is that chart? Here it is, right here, right in front of me. So you could see that they've been sellers of gold going all the way back to 2001 on this chart anyway. Now they are net buyers of gold. So what are the Germans seeing, and why are they buying gold rather than being net sellers? Are they seeing value, as we have been pounding the table on for quite some time now? Gold is going to become the new glam girl, the new Amazon, the new Apple, the new whatnot in a theater coming near you fairly soon. Why? It's because it's the only money, the real money in town. Ever since Nixon took us off the gold standard back in 1971, you've had the need to have a two-income parent household. You could have a guy that had no education, went to work each day, but was still able to provide for his family. His wife stayed home, took care of the house. If you're a progressive out there and you're thinking I'm saying the most horrible thing, women should be allowed to work. Sure, they didn't have to. And most women nowadays, when you speak to them, they have kids, and you say, do you want to work? Well, I went to college, but do you want to work? No, I'd rather stay home with my kids. You hear that more often than not nowadays after they get through college, pre-kid lifestyle, but after kids, everything changes. If you're married out there, after kids, everything changes. So I digress. I'm getting away from the topic of the day, but this is the damage that the Federal Reserve has done by taking the United States off of the gold standard. It has changed society as a whole, and it continues to this day. And now we're in the end game here for the fiat currencies of the world. Good morning. Thanks for joining in. Let's check in on Twitter. Let's see if I'm live there. I don't get any comments on Twitter. That hurts. Good morning, Twitter. All right, we're live. Good morning, folks. A couple of viewers there, not much. All right, so let's get to the pre-market activity. And I have a couple of chart requests to go over from members. And we're going to go this morning until about 6:30, 5:30 Eastern Standard Time. All right, let's begin, as usual, with the dollar 4-hour charts. These will all be 4-hour charts, unless I say otherwise. So we're going to talk about the pre-market activity, not the macro view of these charts. And it's basically just a snapshot of how we may open up this morning. And this morning, we have the dollar, which is holding its own, despite the fact that we have the Federal Reserve in there buying up all of this debt and extending a lifeline to, extending a lifeline to the banks. I guess I'll put it that way. They're taking in collateral from the banks to lend them money. So that's why I say they're buying up debt. So the dollar is holding its own. We flashed a bullish reversal bar this last period. They were trying to take it down. They reversed it. And now we are consolidating. So the morning is looking bright for the U.S. dollar. Now, with that, I want to take a look at the inverse plays, gold. And gold is down, as you might figure. So gold had a good day yesterday, not a great day in that it did not close above the 3,000 mark. I'm having issues this morning, folks. We did not close above the 1,500 mark. So let's watch for a breakout here. I'm not sure what is holding gold back at this point in time. Probably just technicals, probably just a flight to risk in the stock market. But I don't see any better investment out there from a long-term perspective, because at some point in time, the chickens are going to come home to roost. So while I'm willing to buy the stock market, I am not unwilling to go unhedged. I will be hedged throughout the entire time and beyond that we see a rally in the stock market, and I will have a hedge underneath it. I'll continue with our gold mining trade to sell covered calls, as we've been doing for the past month, selling covered calls, bringing in premium. But what will happen is, and this is the game plan, is that when the stock market begins to peak out, we will have been selling premium on our gold mining trade. As stocks begin to roll over, there'll be a flight to safety into gold, silver, of which we're along as well, silver, and the gold miners, and they will begin to take up the slack. And during that time frame, we will be building our position in the gold miners. It will be a central core position, betting that the stock market will take an escalator up in the new bull rally, but it will take an elevator down, meaning it will go up incrementally, stair-step up, but it's going to take an elevator down, dropping very, very dramatically. But we will be hedged, and I will get long. And we already started buying this week. I did open up a short position yesterday. Members, that's posted in the members area under positions. And I have a stop listed there as well, so pay attention to that stop, please. Let's take a look at silver. Now, silver is lethargic on a daily basis, really not giving any signal. It did break out a few days ago, but not giving any signal of as to where these guys really need to clean up. They sort by symbol. Where is it? Here we go. All right. So silver this morning is down about a third of a percentage point. No man's land, really. I mean, it's lethargic. We are putting in higher lows. We broke out here on the 18th. Attempted a breakout. We were rejected. That rejection is now being reflected in this lethargic trade. Nobody wants to step up to the plate. Everybody's betting that stocks are going to move higher. And nobody wants to buy silver, which makes sense because it's probably going to be depressed on a stock market breakout along with gold. So that's why we've been selling covered calls and generating income. Now, NASDAQ looks to be breaking out to new highs. Yeah, I like silver. We've already started accumulating silver a while ago, and I think we nibbled on it twice so far, adding on strength. So we'll look to add more. I don't think there's a rush here. We're long of the USLV. There are no covered, no options on USLV. Oh, there are. I'm thinking about UGAZ. Sorry. So we may look to sell covered calls if there are options on the USLV. I haven't checked on that. But we are selling covered calls on our gold mining trade, which is NUGT, and we're generating income, and we're doing nicely there. And we're just waiting for the breakout. On stocks, on a pullback, if we get that, we will add more to our gold mining trade. Let's take a look at bonds this morning. And bonds are up. And this is a pretty healthy chart. What we're seeing here is an inverted head and shoulders setup. Here's our left shoulder, here's our head, here's our right shoulder, and it looks as though we're going to push higher. Now, why is that important? It's important because even if stocks break out, and they can in a rising bond price environment, they typically trade kind of inversely of each other because you have money rotating into one sector or the other, or one investment or the other, but they can rally together, or even if the bond market holds its own here and consolidates, that'll allow gold and silver to rally as well, along with stocks. So I like the setup here. It's bullish. We have on a weekly basis on yield, 10-year yield, we've broken out to new weekly highs above a resistance level. Hey, Sam. Good morning to you. 5:14 here. That means it's still morning there, right? I'm trying to get used to it. Sam is over in Italy, folks. All right, so 11:15. Cool. All right, I'm getting it. All right, so the bond market is looking good. This kind of makes me feel warm and fuzzy about holding on to precious metal plays into the new trading day. That could all change tomorrow, depending upon the price of the bond market. The bond market is key to everything. But right now, you really have to question, what's the real pricing on the bond market? The Federal Reserve is skewing everything. Every time you see an attempt by the markets to find true fair value on the bond market, the Federal Reserve interjects and tamps down on bond prices. Bond prices should be a lot lower than where we are right now, and yields a lot higher. And I said bond prices, tamp down on bond prices. No, they're tamping down on bond yields. So bond market is looking good this morning. That bodes well for our investments. Let's take a look at stocks. We do have earnings coming out this morning. We're flat on the session. We are above the 3,000 mark on the S&P 500. So we're looking for a breakout here. On the NASDAQ 100, very lethargic. We're up about a third of a percentage point. Lethargic meaning relative to prior highs here. So we need to see a breakout fairly soon here. I mean, the daily charts are implying that we should see a breakout. The only thing that's missing is volume. There's no volume. It's horrible on a daily basis. Taking a look at the Russell. Now, the Russell is looking particularly good in that we're very close to weekly highs. We attempted again overnight, but were rejected. So the Russell is looking good. I want to take a look at oil. Oil had an outstanding day yesterday. And no shock here, we're pulling off of our highs of the session. Now it looks like we're about to, if this 4-hour bar close where we are at better, we're going to challenge the highs of the session. And I bet you that the derivative plays like home heating oil, gasoline, let's check out those prices. Yep. Home heating oil, getting ready to rip here. I'm calling my oil company, telling them to fill my tank for the next several months because it looks like we are breaking out here on home heating oil. A very powerful chart here. What I'd be looking for is a rally up and through. This is a daily chart, folks. It looks as though we're going to break out above this secondary downtrend line. We'll probably rally up to the 2.06 level on home heating oil, which is a fairly good move. I'll take a look, Sam. Let's take a look at home heating oil, gasoline. Sometimes it stinks being live because you get this dead air when you're searching for stuff and you can't edit it out like I used to. Where the heck is gasoline? All right, I don't want to spend too much time here. Should be right here, but it's not. All right, let's skip over it. I'm sure gasoline is rising as well. The reason why I'm looking at these two derivative plays is because it just goes to show you that while the Federal Reserve doesn't want to talk about food and energy in their inflation numbers, they like to back it out. It matters because once we start breaking out on home heating oil, the American consumer is going to, it's not a stock, it's actually a future symbol. So we could try. It should be under G. And it's not here. No, they use a forward slash. No, that's not going to work. All right. That's just gasoline. Gasoline's probably pressing higher this morning as well. In fact, we could just do this. Boom. All right, so on a daily view, gasoline unleaded. This is going to get so bad. This is going to get bad. There's no inflation, folks. There's no inflation. Don't worry about it. Let's talk about this chart for a moment. The fact that this is just a daily chart, no less. I don't even want to look at the weekly chart. You take a look at this chart. Man, this is a pretty chart, but unfortunately it's going to hurt people. You have a tremendous amount of layoffs not being reported out there. And people are going to get hit with inflation, and it's really going to stink. Did I cover oil and natural gas yet? No, I can bring it up. Good morning, J.A. How you doing, man? All right, so this chart here of gasoline is quite frightening. Take a look at this consolidation on RSI. So momentum is building here. We have a higher low, a double bottom setup, which is why I put these arrows up. I think we're breaking out probably today on gasoline. We'll be above this upper band of resistance. Look at this volume. Good to hear. Fed announced it's increasing its temporary overnight repo. Yep, I went over that earlier. Yeah, it's bizarre, right? Why gold is not ripping right now, I have no idea. And I had a request from one of our members to go over FAZ, which is the bear ETF on the banks. And I have that up here. I'm going to go over that in a minute. It's absolutely bizarre that the media, which is basically just a propaganda machine for the government nowadays, they're just simply not covering this story as they should. It's shocking. It's absolutely shocking. It's very sad because the damage that's going to get done here, not just to the country, but to the smallest of the small, the poorest of the poor, they're going to get hurt the most. You have the middle class, which is just absolutely being annihilated in the United States. That's the growth engine for the country. And you have a transition of wealth, a redistribution of wealth that is underway that is simply unparalleled. So the outcome here is going to be very, very sad. Dixie is on 200-day moving average, I'm assuming. Can you just please clarify that, Sam? Dixie is on 200 averages? Maybe for that? I'm not quite understanding that. So gasoline looking good. Out of curiosity, I just want to bring up the weekly chart, if you just bear with me. We have only 5 minutes left to go, so I want to get through a couple of these symbols, but I'm curious about gasoline because this is a pretty chart. We have a lot of overhead supply here, but once we start breaking out and above, 2.01, 2.15, 2.28, It's going to be very, very game on to the long side here for gasoline. Watch this chart, folks. Watch these charts. I'm looking at quarterly charts, monthly charts. It may not be this week. It may not be this month. It may not be next month. But in 2020, I'm predicting that we are breaking out to multi-year highs on gasoline. So beware out there. Let's talk about, so the Dixie, let's bring up the Dixie. Here, let's do this. Yeah, I went over this earlier, Sam. It looks good. I don't have the 200-day moving average up here, but looking at the support level we're reversing off of, I mean, yeah, we broke down here on the 18th. We've rallied back. We recaptured that support level. I didn't think that we would hold it, but at current, we are holding it. So fairly good underlying strength here for the dollar, and it's got to be coming at the expense of at least one of the other major currencies. And my guess is it's at the expense of the Eurozone. They're pulling back some. Let's check out the yen. The yen is very weak. Very, very weak. So there's a problem over in Japan here. This is a very, very weak chart. And we're going to that type of economy. Lots of debt. You'll probably have the Federal Reserve in there buying stocks at some point in time in the future. Let's take a look at some closing charts here, and I'm going to shut it down in 2 minutes. All right, so for fellow member Tom, we have FAZ. This is a weekly chart. We're going to do that high-level view dance. And I have another 2 charts to go over for fellow member Manoj. So we have actually 3. FAZ, weekly chart. So this is a bear ETF for the banks. Now, we broke out here the week of September the 30th. And we are now pulling back. What I have overlaid here on this weekly chart are monthly support and resistance levels in dashed line. Overlaying weekly. We'll take off the monthly. We're in a tight trading range here on the banks. Let's go to on the leverage bank bear ETF, not the long ETF of the banks, which is the FAS. We flashed a bullish reversal off of support on the 22nd. Yesterday, a bearish reversal bar. I don't know whether or not I would buy these shares right now because I'll be talking out of both sides of my mouth, in that I believe that we are going to get a rally in this market. The banks should participate. So to buy these shares right now, Daily, by the way, I don't trust the bounce. I don't disagree with you for not trusting the bounce, Sam, because the why I wouldn't trust the bounce on the dollar is that you have the basket of currencies that makes up the Dixie. You have 55% of that basket being the euro, with a lesser extent the yen being the second in the chain of the largest positions that the dollar trades against. So the 2 major currencies that influence that basket are A, the euro, B, the yen. But the euro, if the euro begins to break out, it has a larger influence on the Dixie. And even though the yen might be weak, the strength in the euro may cause weakness in the US dollar, if that makes sense. So the euro, when I just went over that chart, didn't spook me. The yen kind of spooked me. It looks weak, but it's consolidating. No imminent threat there. But the euro is still holding its own, and maybe it's because Boris Johnson's not getting anywhere with his own party in Parliament. Maybe that's the thing, and they're just going to kick the can down the road with Brexit, putting a bid under the euro. I'm not sure, but my guess is that that's what's keeping the euro from not dropping like a rock right now and putting a bid under the US dollar, if that makes sense. So I don't think you're wrong. The yen should haven when there are troubles, by the way. Well, typically it's the US dollar that is the safe haven. However, if you see a crisis in the Eurozone, I would expect both the yen and the euro to be safe haven plays. If the crisis is here in the United States, then it's really going to be gold and silver that are the safe haven plays, and to a lesser extent, the euro and the yen, because there's going to be concern if there's a major problem with the US dollar. Yes, there may be an increase in the euro and the yen, but the question is going to be, what are the ripple effects going to be over in Europe and the yen? So the yen could quite possibly be a safe haven play. It all depends upon what the crisis is. If it's a currency crisis, gold is going to rip. And that's what I'm betting it's going to be. I think that all of these fiat currencies are under a lot of threat right now, which is why I opened up this commentary with the fact that Germany is buying gold. It's one of the first major Western economies to begin being net buyers of gold rather than net sellers of gold in 21 years. Think about that. What is that telling you? Is there a trend there? No, not yet. Let's see if they continue to buy. And let's see now if all the other Western nations begin to jump on the gold bandwagon, as the Chinese and the Russians have been for quite some time now. And they're trying to get away from the US dollar, and they're hedging their bets on their investments in United States Treasury bonds, because they have a ton of them, especially China. And Japan has a ton of them as well. So if you see a bond sell up here in the United States, remember that the Japanese are the second largest holders of bonds. So the yen may not be a beneficiary. Yeah. I'll post a link. Let me get this out to you. Hopefully that comes through on your end. That's the first time I posted a link in this chat box. Can you let me know if that opens up, please? So let's go on. I'm going to close this out. I'm now running over here. We're going to go over let's go to stock charts. I started going over the FAZ. We're going to return to it. Bearish reversal bar yesterday. If you're going to buy these shares, you need to put a stop right under this support level here at the 32, let's call it 3270 level. Thank you very much, John. Appreciate that. Thanks, Sam. Okay, so moving on. So FAZ, let's take a look at an intraday basis in case I'm missing something here. All right, so watch for a pullback to these support levels. If they hold, great. Maybe you have a speculative trade on your hands. But if the markets are moving higher and they're breaking out, I would not buy these shares. Don't fight the market. Let's go to Inamed, I believe this is, if memory serves me right. Immune Bio, wrong. Okay, Immune Bio. Let's begin with a weekly chart. Not a lot of data here. We are in a downtrend. You know, relative to prior weeks, we have broken out this week. I think that with 2 trading days left to go, it's worth keeping an eye on it to see whether or not we close above the support level. And then next week, if we get a pullback and a retest of support, I would also focus on when our earnings. I would not hold these shares into earnings, especially a biotech stock. So the RSI is looking really good. You have a double bottom setup here. And we are breaking out on RSI, double bottom setup on Stokes. Chart's looking good on a weekly basis, assuming that we hold above support, which has acted as resistance in the past. Daily chart. All right, so we closed right at resistance. So that being said, I can't buy these shares. When would I? Show me a close above $5 per share, and that gets interesting because that means that we are trading above resistance on a weekly basis. Let's bring up the overlay here. It's not reflecting because there's not enough data. All right, so there's not enough historical data to bring up a weekly chart overlaid on a daily chart. But if we close above $5 per share here, because this line is declining, $5 to $5.10 per share, that means that we're above a weekly breakout and a daily breakout as well. Then it's worth watching. The Stokes are rising. They're above 50. RSI is pulling back, but I think they'll hockey stick back up and move higher. INMDB is looking pretty good. 4-hour chart. Again, very similar to the daily chart. We have overhead supply here. I would wait for the breakout, buy on strength, and a weekly breakout. Watch that weekly breakout. That's really critical. That's the higher level view. Canopy growth. We're breaking out on a daily basis. Let's go to a weekly chart first, though. No. It may move higher. It may not. Weekly chart remains in a downtrend. A descending wedge formation. I will say that the RSI and the Stokes are looking good, but the trend is clearly down. So to purchase these shares simply based on a weekly chart would be speculative at best. On a daily chart, we're trading at current above. This is a weed stock. We're trading above resistance. I wouldn't be a buyer here until we closed above 21.75 on a weekly basis, no less. I would rather pay more rather than getting shaken out of this stock on a sell-off because that weekly trend is still down. Hey, totally indifferent. New name. Thank you for the feedback. Glad to hear the link worked. Good stuff. So yeah, take a moment, review that article before we sign off here. And I will go over, Sam, what was that symbol? TEN? I believe you said it's on the Italian exchange. I doubt I have that, but we'll take a look at it. I'll bring it up on stockcharts.com. They have a very broad basket. This doesn't look like an ADR. It's trading on the NYSE, so I doubt this is it. Tenneco Automotive, Sam, can you please validate that? It's not. Yeah, I didn't think so. All right. With that, folks, I'm going to shut it down for this morning. Thanks for joining in. Everybody have a profitable trading day. And I will talk to you soon. Be well.